Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because this is one of those charts that once you see it, you can't unsee it. And it gives a very clear picture as to what's likely going to happen to Bitcoin and other risk assets over the next few months or so. And the reason I put this chart together as a zoomed out reminder for myself in the first place is because of one of my favorite investing quotes of all time from legendary investor Peter Lynch, where he said that far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Now, I'm sure this quote resonates with a lot of you. It definitely does for me, especially after what we've seen over the past year and a half or so. Bitcoin has gone up only for a year and a half, essentially. Same thing for the S&P 500, just up and to the right. But every single step along the way, mainstream media and a lot of social media channels, and even myself sometimes, would just focus on the looming recession concerns. There's going to be a correction in the short term that we may have to be prepared for and take advantage of. But it's really missing the forest for the trees, in my opinion, because if you ask anybody where they expect the S&P 500 to be in 3 to 5 years, or where they expect Bitcoin to be in 3 to 5 years, or where they expect the money supply or the national debt to be in 3 to 5 years, I would assume that anybody who knows anything about markets or currency would tell you that all of those things are likely going to be a lot higher. So the superpower in this sense is being able to be patient and sit on your hands and do nothing and ride this trend that has been happening over the past 70 or 80 years or so. And of course, one day it might implode on itself, but making the bet over and over again that it's going to happen in the short term and all of this is going to come crashing down immediately has been a losing bet for quite a while now. And I think it continues to be a losing bet for a while. And that's very clearly represented by this chart here. So here we have the US national debt in white charted against the S&P 500 in red, and I have it broken up into 4 color-coded eras that are separated by recessions: pre-dot-com in blue, pre-great financial crisis in green, post-great financial crisis in yellow, and post-COVID in orange. And I have the slope of the US national debt increase color-coded with these little trend lines here. And you can see a very clear trend that's been happening over the past 3 or 4 decades. And that's that every single time there's a crisis and a recession, we come out of it with even more aggressive money printing and national debt increase than we did going into it. From 1991 to 2001, we saw the national debt increase from 3.5 trillion to 5.5 trillion, about a 2 trillion increase over 10 years. And if you look at what we're on pace to do this year in 2024 alone, we're on pace to have 2 trillion in deficit added to the debt just this year. And it took us 10 years back then. And even this federal deficit line here, you can see these increases in deficits are becoming more exponential. And of course, that's what's represented by the curve here in white. And then of course, we had the dot-com bubble. And what do we do when we come out of it? We increase the rate of debt issuance. We go from 6 trillion in debt to about 9.5 trillion in debt, which is about double the increase we saw from 1991 to 2001, but in 5 to 6 years instead of 10 years. And then of course, the big one everyone is familiar with, and also when Bitcoin was created, coming out of the great financial crisis, we see a huge collapse, but look at the debt growth here in yellow that we saw after the great financial crisis, going from just under 10 trillion to over 23 trillion in about 12 years or so. And then, of course, we had March 2020, we had the global shutdowns, and the rate of debt increase and currency issuance ever since has been even more vertical, as marked out in orange here. And of course, we know central banks and governments have 2 options: keep the party going and keep issuing new debt to pay off the old debt and keep the party going, or let the entire system implode on itself. And I just don't think that's something they're going to let happen until they run this deficit party and keep this national debt increasing until it implodes on itself and it becomes no longer in their control. But as long as they have the choice, I think debt issuance continues to increase. I think this slope continues to steepen. And when we do end up getting that recession everybody's waiting for because of these elevated interest rates and the tightening happening in the economy, I bet you the debt issuance coming out of that crisis will be even more aggressive than what we've seen from 2020 up until today. And just like we see an increase in slope from the national debt in white after each recession, the increase in slope of the S&P 500 as well matches it almost directly. And of course, that's because if the rate of currency devaluation is increasing exponentially, assets that are priced in that depreciating currency will go up exponentially as well. And what do you know? What was created in 2008? Arguably the best money debasement asset ever created, because its sole purpose is having a fixed supply. And as long as it's priced in that devaluating currency and the supply of Bitcoin can't be messed with, it's likely to do well and go up over time, which is why its trend ever since it was created in 2008 has been up and to the right. And as a famous philosopher once said, there is no second best asset. But anyway, this is the zoomed out picture I'm trying to remind myself of. There will be black swans along the way. There will be volatility along the way. But this trend of this debt spiral we've already entered, the train has already left the station, in my opinion. And if we are going to have a huge correction and collapse, it could happen from significantly higher prices for the S&P 500 and other risk assets, because we're only seeing these deficits to get steeper and steeper. And I don't think politicians are going to let this collapse. And I think this quote will remain as relevant as ever over the next 12 months, where more and more people continue to remain sidelined because they're waiting for the big correction and collapse, but nobody knows exactly when that's going to occur. But we all agree that risk assets will likely go up in the long term. And when you look at the S&P 500 priced in dollars over the past 100 years, it looks like this terrible bubble that could collapse any moment. But when you look at what's been happening to the money supply and national debt, and you divide the S&P 500 by the circulating M2 money supply, you can see that the current bubble that we're in isn't even as elevated in M2 money supply terms as the dot-com bubble. And this is one of those charts that people hate to talk about. They love to ignore it. But if you price it in the amount of dollars actually in circulation, the S&P 500 is nowhere near as overvalued as we got in the dot-com bubble before we had the big crash back then. And same thing for Bitcoin when you actually price it in M2 money supply and adjust for the currency in circulation. Obviously, there haven't been many changes to the money supply over the past year and a half or so, because the Fed has been running off their balance sheet and letting the money supply decrease a little bit. But Bitcoin looks like it's putting in this nice retest of the highs put in October 2021 and March 2021, and it looks like it wants to go higher from here. And I know we like to talk about the short term, and we will continue to do so, because I like being prepared for multiple outcomes, and I don't like to be blindsided by scenarios I didn't see coming. But whether this ends up being a left translated cycle or a normal cycle, or some black swan comes out of nowhere that catches everybody off guard and sends us lower, I still think Bitcoin does well over the longer term, but we're going to have a lot of volatility and emotional management that we're going to have to navigate along the way. And it's amazing that while we have this debt spiral going out of control, and it looks like we're about to see some of the most aggressive money printing we've seen in our lives once this next crisis occurs, we have regulation doing a 180 and becoming more supportive of Bitcoin and the crypto industry as a whole, undoing a lot of the damage done by the SEC. We have crypto-friendly regulation being passed through the House and getting a lot more regulatory clarity. And the leading presidential candidate for the November election is coming out pro-crypto. Of course, he's doing it for votes, the same way it's putting pressure on the other side of the aisle to change their stance as well, because we now have this as a headline topic, and it's no longer popular to be anti-crypto with voters. And of course, now we have the leading candidate in the predictions markets, but it's likely both sides of the aisle have to become pro crypto now because so many voters care about it. And we have this type of regulatory clarity. And this is all happening after we got Bitcoin's first ever spot ETF, and we just got an approval for an Ethereum ETF. And of course, they were both launched by the largest asset manager in the world. And that same asset manager is also building on Ethereum, which will likely become deflationary once that starts to bring a lot more activity to the chain. And of course, we also have Solana with its cheap fees and its very user-friendly design. So really all we have to do is hold assets we believe in, survive the volatility, and just be patient for the longer term. And some of these zoomed out charts are great reminders of why we need to try and remain calm and patient. Of course, there will be black swans, there will be crashes, there will be large corrections, but as Peter Lynch said, a lot more money is going to be lost holding cash and holding a devaluing currency, waiting for those opportunities. And that's even to say if we were to have a big crash, people would be able to buy the bottom of that anyway. Normally what we see whenever there's a correction, people just sit on their hands and hope for lower and lower and lower prices and end up never buying anyway. But anyway, I think the best thing that can be done here is understanding that currency devaluation isn't going anywhere. The national debt will continue to increase, and there will be a lot of volatility because of the macro uncertainty brought upon us by these elevated interest rates. And we'll have to monitor things like inflation and what's happening with the unemployment rate and what that could do for markets, because Bitcoin is very sensitive to monetary policy thanks to its correlation with the S&P 500 and other risk assets. But as of right now, we have a very nice setup for upside over the next few months. And I think being too worried about corrections is going to make many people miss out on that. So for now, we get to sit on existing positions and enjoy the party. S&P 500 trading above its previous local highs and looks like it wants to go higher, especially when we account for election year seasonality. And I don't think the deficit is going to slow down anytime soon in this election year. But of course, with the S&P 500, hopefully doing well over the course of the rest of the year, it likely takes Bitcoin up with it. And it's nice to see Bitcoin trading above 69,000 this morning. The week is just getting started. Maybe there's more chop, and maybe we do end up getting a normal cycle after all. But with each passing day, the left translated cycle is looking more and more likely, especially because now we have Bitcoin dominance on the verge of breaking down below 54%. And maybe we could get that alt season everybody's been waiting for, but it's still too early to confirm that, in my opinion, because we haven't closed below 54% Bitcoin dominance quite yet. But as long as we keep seeing strength from Ethereum, it's likely going to break down eventually. So we'll continue to cover macro and be prepared for multiple outcomes on this channel and discuss what's happening with the news and markets in the short term. But if we zoom out and think about, is now a good time to buy Bitcoin? It's starting to trickle into that overvalued region once again. We've seen sellers step in this area. If you buy and hold it for the next 10 years, this is probably not a terrible place to buy, but you're likely going to be underwater if we see any type of corrections in the short term. And when we discuss what's possible, I still think low 50Ks are possible if there's a big surprise that causes a sharp sell-off, but Bitcoin and this market as a whole looks like it wants to go higher on this Ethereum ETF narrative. But of course, the most important thing, in my opinion, is zooming out and focusing on the longer term trends and trying our best to survive by avoiding leverage, avoiding trying to short the market and losing money that way, and just having a nice balance of cash on the sidelines to take advantage of opportunities, but also assets we believe in that we can survive the volatility on and hold for long term as they get repriced higher because of this constant ever-going currency devaluation and money supply increases. And I think I'm going to add this chart to our long-term reminders as well, right next to the long-term Bitcoin one, because when you look at it from this perspective, look at the trajectory we've been on for the past 30 years or so. I don't see that changing anytime soon. And I think this slope becoming even more aggressive and the next debt issuance being even more vertical is a lot more likely than them letting the entire system collapse here. But anyway, let me know what you expect. Are we going to see a collapse in the short term, or are we entering the everything bubble? I would love to know what you guys expect. Thank you so much for the support on the recent videos. As always, thank you so much for watching, and I'll talk to you soon.